Imagine a secret room filled with the greatest minds in money. Warren Buffett, George Soros, Ray Dalio, Peter Lynch, Cathie Wood, Jim Simons, and more. Each of them took a wildly different path. One read 500 pages a day. One used math to beat the market. One shorted the Bank of England. But behind every billion-dollar fortune is a story. A decision, a philosophy, a failure. This isn't just about wealth. This is about wisdom. And today you'll learn the investing secrets they don't teach in school. Warren Buffett was 11 when he bought his first stock. He made his first tax return at 13. But his real breakthrough came from doing less, not more. He waited. He read. He studied companies the way a biologist studies DNA. One of his most famous deals. Buying Coca-Cola in 1988 when everyone thought it was overvalued. He still owns it. Buffett's secret? Time plus discipline. He once said, "The stock market is designed to transfer money from the active to the patient." Peter Lynch ran the Magellan Fund at Fidelity. From 1977 to 1990, he delivered 29% annual returns, nearly double the S&P 500. But his edge? Simplicity. He believed the average person could beat Wall Street by paying attention. He once discovered a winning stock, Legs Pantyhose, because his wife liked their product. No spreadsheets, no Wall Street analysts, just observation. Lesson good investing starts at the grocery store, not a Bloomberg terminal. Lesson if you use it and love it, research it. George Soros made $1 billion in one day by shorting the British pound. But before that, he was a refugee, a survivor. He developed a theory called reflexivity, that markets are fueled by flawed human perception, not logic. In 1992, while most feared economic collapse, Soros bet big, because he understood the psychological cracks in the system. He didn't just study charts, he studied people. Lesson, your edge is not knowledge, it's perspective. Lesson, in chaos, find clarity. Ray Dalio once lost everything: money, clients, credibility. After a wrong market call in 1982. He had to borrow money from his dad to pay rent. But instead of quitting, he created a rule-based system to avoid emotional decisions. That system became Bridgewater, the world's largest hedge fund. Dalio wrote his principles down, creating a culture of radical honesty and algorithmic decision-making. Lesson failure is data. Learn from it. Build a system stronger than your emotions. Cathie Wood defied Wall Street norms when she launched RK Invest. She bet on companies like Tesla, CRISPR, and space exploration before they were cool. Her strategy? Invest in exponential innovation. While critics laughed, her funds exploded in value during the 2020 tech surge. But when markets turned, she held on, not to stocks, but to vision. Lesson vision requires conviction. Innovation is risky, but necessary. Jim Simons wasn't a banker. He was a mathematician and codebreaker for the NSA. Then he quietly built Renaissance Technologies, the most successful hedge fund in history. He used data, pattern recognition, and algorithms long before AI was mainstream. His fund returned 66% annually over 2 decades. And yet, almost no one outside Wall Street knows his name. Lesson: the quietest minds often win the loudest games. Quant beats gut, if you have the tools. Benjamin Graham lost everything in the Great Depression, but that pain shaped his philosophy, always buy with a margin of safety. His teachings birthed Buffett and shaped decades of conservative investing. His book, The Intelligent Investor, became the financial Bible. Lesson: protect first, profit later. Lesson: emotions lie, value endures. John Bogle didn't try to beat the market. He made it fairer. He founded Vanguard and invented the index fund. Wall Street hated him, but he made investing accessible to the everyday person. His creation now manages trillions and saves investors billions in fees. Bogle's mantra: in investing, you get what you don't pay for. Joel Greenblatt found a way to make investing mechanical. He created a simple formula: buy good companies at cheap prices. He returned 40% plus annually using this method, and then gave it away, for free. He even started schools with his profits, believing education is the best investment of all. Here's what all these legends had in common. Buffett waited. Soros challenged reality. Dalio built systems. Lynch trusted simplicity. Wood saw tomorrow. Simons used data. Graham demanded value. Bogle democratized investing. Greenblatt kept it simple and gave back. None of them followed trends. They followed truth. They made mistakes. They got mocked. And they kept going. Final wisdom. The best investors don't just invest in stocks. They invest in how they think. So the real question is, what are you investing in? Not just with your money, but with your mind, your time, and your attention. If you found this inspiring, hit that like button, subscribe, and drop a comment. Who's your favorite investor? And what's your biggest takeaway today? We've got more stories of wealth, wisdom, and hidden power coming soon.